conversation with the management of Dixon Technologies. We have Saurabh Gupta, the CFO, who's joining us on the show. And Mr. Gupta, hi, morning. Thanks so much for your time today. Let's talk about your segments. Let's start by talking about mobile EMS, which now contributes roughly 90% of the revenue growth. How is Dixon mitigating customer concentration and segment cyclicality risk, especially as you are targeting a higher domestic share?
Yeah, so over the last, so first of all, good morning and happy Diwali to all of you, to entire team of 80 now. Yeah, so mobile is the largest trigger for our growth, and in the last few years we have been able to acquire a lot of customers on the Android ecosystem. So that will continue to be the largest driver for growth going forward as well. Even the telecom business has done very well, and we are working on getting some more orders or working on getting some large clients on the non-CP devices there. So my sense is we have a decent order book for the next 6 months, and we are looking for a very strong growth in this vertical, led largely by mobiles and IT, largely by mobiles and telecom. And going forward by next financial year, even IT hardware should start to play a reasonable contribution to this category.
Saurabh, Sajid here. Are you maintaining your target for the mobile segment, 60 to 65 million units for FY27? And how is the Longcheer JV performing?
Yeah, so we got the approval for Longcheer JV from the government. Currently, the business plan has been worked out. We have taken a new facility, which should be operational by somewhere closer to April. And we are looking for a decent volumes from that JV, along with a lot of learnings from a partner. And yeah, we maintain a guidance of 60-65 million for next financial year. This year will be closer to 40 odd million smartphones. We have done 20 odd million in the first 6 months. Yeah, and the Diwali sales have been very buoyant. We have, based on our information and our interaction with the various customers, the Diwali sales have been very good, which means the secondary sales have been good, which means this quarter also is looking very promising there.
So your consumer electronics division, how it's been doing? You spoke about the Diwali sales. Is there good demand coming in for the consumer electronics there?
Yeah, all across actually, not only consumer electronics, which is refrigerators and TVs. Even we saw good demand in the washing machine segment as well. Even mobiles has seen a strong growth. So overall, this has been a good Diwali for us, and definitely the GST cuts is reflecting in that increased demand environment, and we see that momentum to continue. Clearly, the Diwali the sales has been very, very buoyant.
Saurabh, hi, this is Harsha. What's the outlook with regard to the era post PLI, if that were not to come through, post FY26? You've obviously guided for margins to go up. How confident are you of that if PLI doesn't come through, of course, post FY26?
Yeah, so we are a beneficiary of 5 PLIs. The mobile PLIs are first coming to an end in March 26. Of course, the government has initiated the discussions to give more support to this sector, because this sector, the mobile industry, has done really well. From a net importer, India is exporting a lot of mobile phones now. So clearly, the government might extend the PLI. There are decent chances for that. But assuming if it doesn't come out, so we have already forwarded into a lot of components. We have filed our component PLI applications for display, where HKC is a partner. We have filed it for camera modules, where we acquired a company called QTech India. We have filed it for batteries, for mechanicals, and also one component of the telecom side. So clearly we see that irrespective of the PLI goes away, the backward integration play should more than compensate for the PLI going away. And we should be able to expand our margins by almost 120 to 130 basis in the next 2 years, part of which should start reflecting in next financial year. So yeah, we are confident about it. This backward integration play will come at a very good margins for us.
You spoke briefly about the fact that you're looking at telecom equipment as well. Your B2B, you got a B2B order from a US customer. How big or scale up that can happen for you with respect to telecom equipment?
Yeah, so this is a large order from a large US brand for radios, which is part of the RAN, Radio Access Network. And yeah, it will not only be for the domestic market, but also for global markets. Yeah, we feel that over a period, this can be almost closer to $120 million for us with a decent margin. Yeah.
And if you can also give us a sense of the kind of expansion plans that you have for the next 2 years as you move towards higher margins of 4.5-5% that you had targeted.
Yeah, so one is, of course, taking our mobiles from this 40 odd million that we're targeting this year to 60-65 million with a decent backward integration play. Secondly, we feel that IT hardware, which hopefully this year should contribute closer to 1,200-1,300 crore revenues, can potentially double, and in fact, it can continue to go up in the next couple of years with a decent backward integration play there as well on SSDs, memories, power supplies. And also the telecom business, one is, of course, a business with an anchor customer, but now we are working closely with this large brand for the non-CP products as well. So my sense is in 27-28, we can potentially double our revenues from the level of closer to what we had in 24-25. So that is a kind of order book. So we feel not only the revenue potential, the revenue visibility is there, but yeah, we feel that the margin expansion should also happen across categories. Yeah.
It's a positive going ahead. Saurabh, your take on exports, the percentage it makes up of your total top line, and your outlook on where you plan on taking the exports business?
Yeah, so last year we had exports of 1,700 odd crores on a top line of 39,000 odd crores. This year, in the first 6 months, we have already done an exports of 3,000 odd crores. And my sense is the next 6 months also we have a decent export visibility for some of our anchor customers, largely led in mobiles. We have also got some pilot order in a lighting business from a large US retail chain. And we are also working on another order from a German client. So clearly both lighting and mobiles should drive our growth as far as exports are concerned, and this number you should continue to grow. So both in absolute numbers and both as a percentage, my sense this number should go up every year.
Okay, thank you so much, Saurabh, for giving us all of those details with regard to Dixon Tech, both on Q2 as well as on the roadmap going forward. Couple of years to bump up margins by 120 basis points.
Strategy and